Good morning, everybody. Happy Thursday. Welcome back to the Daily Profit Plan. How is everybody doing? Final day of trading for the week. Markets are off tomorrow for Juneteenth. We have a triple witching today, post-Fed, monthly expiration, futures expiration. Yeah. And overnight, actually a pretty nice recovery overnight. So I'm looking for an immediate profit on Flashpoint. If you're in that Flashpoint with me, Flashpoint was a 7465 by 7470. We are trading up to around 75 in change right now. I'm sorry, we're at 74.83. So let's see if we are getting. I'm seeing price bouncing back and forth. I'm probably just going to close at the open. So I've got a 330 credit sitting on a 220 debit. I'm happy to take like 320 or higher. So if I can try to get filled at 330 right away, I'm just going to move this back down to I think the target yesterday. Flashpoint had a target. Let me show the screen here for Zoom. There we go. Okay. So we got filled. I posted this in Flashpoint yesterday. So this was our FOMC. We closed around 74.20 yesterday. That was the close. Overnight, the market started to retrace right away, and we're trading even this morning. We're still trading around 74.85. So we got filled at a 65 by 70. We're going to see some profit this morning. We got filled for a 220 debit. If this morning this is trading for 320 or higher, I'm going to take the profit and move on. So inside the alert, I want to say that the target was 325. So right now I'm setting it at 330. I'm going to try to grab an extra nickel. That would be what? $1.10 out of a 220 debit. So I'm looking at a 50% winner. I'm happy. Anything like over 40%, I'm always happy with Flashpoint. If somehow the broker's like, hey, our first fill is $3.35 or $3.40, then I consider that like a lucky fill. I'm happy to see that be like a better fill than what we have. But I'm putting in my order at a 330. I'm looking to get filled for at least a 325 or 320 credit to take a win. Okay, so let's say we make $100. If we go 100 per contract out of 220, you're still making 45%. That's a really nice winner for Flashpoint. So SPX yesterday was the 17th. And today's the 18th. We're looking to close it out. SPX 622 expiration. 7465 7470. Okay. So we'll see what we get that initial fill for. Hopefully it's over $100. I'm putting the credit in at 330. See if that takes. Anything 320, 325, or 330, I'm pretty happy on the trade for Flashpoint. Okay. Today, so we're trading at 7484. That's live price. The plus minuses on the day are much bigger than yesterday. We had a 52.67. The day was outside of that move. We end up closing the day out, I think, 91 points lower. So taking the gap adjusted close from the previous day, market was down as much as 107 points, came back to around 91. So inefficient day yesterday. We'll see if today, even though it is triple witching, even though it is post-Fed, right before a holiday as well, I would like to think that the dealers are still going to be, containing price action today. And so the IV has grown. Tasty Trades plus minus was 66.53. I'm getting a slightly higher reading. I'm just going to round this up to like 70 and kind of play my expected move around 70 points. And that takes kind of the levels I'm watching. So we're at 86 right now. 7560 is the level I'm watching for some highs, and all the way down here to 7320, which is quite a bit lower. I mean, 7400 seems like that's last week's low, or I'm sorry, yesterday's low, 7400. If we fell 80 plus points, I mean, that's a big, big, big fall. So I may tighten up the put side here and maybe go into like the 7350 zone, depending on what that delta looks like. But I think today, hopefully, we get a reasonable stab at an iron condor with some good premium. So I might be willing to go 15 or 20 wide. I'm probably going to play defense on it, but see if the markets can come back and bounce back for today being a more efficient day with yesterday's. I mean, it was an interesting slide into the close. I mean, I listened to most of the press conference and Q&A. I didn't really hear anything specific that Kevin Warsh said the markets didn't like. I think the reality was the markets are still looking at like, yeah, I think the Fed's going to raise rates, and Kevin Warsh is doing away with forward guidance. And that's, one thing that we haven't really seen I mean, it's been since Yellen and Powell, and now Warsh is taking it. It's like we've had 14 years of forward guidance. And if you think about it, like post Great Financial Crisis, forward guidance has been something that the market's always latched onto. It's like, what's the Fed going to do? And then the market considers it. But he did make an interesting point yesterday where it's like, let the market decide. And then the Fed can like put itself in the mix versus the market seems to always be thinking, what's the Fed going to do? And then the market's hesitating on what to do because it's waiting on what the Fed is going to do. And that's not really a free market data point. So again, to some degree, that's kind of what he was saying is we take away forward guidance and we just make the market price in what it needs to price in. And then the Fed can, have its own plan with task forces. How many times, if there's a prediction market, I wonder if there was a line on that says, how many times will Kevin Warsh say the word task force? Maybe that's going to be for his next meeting. So, all right. Market didn't like the fact that he is reviewing multiple aspects, including what goes into inflation, balance sheets. Yeah, I mean, he had mentioned before, it's like some of the old school sample collections. It's like you're doing things that are not modern day data points. You're doing surveys. It's like if there's less participation, you're not getting good data. You're not getting real time data. I mean, when we know that we can look at something like Trueflation and see that is 2.4% different. I mean, 2.4% different than BLS and the headline CPI that's got everyone scared at 4.2%. It's like, which one's more accurate? I mean, they already remove energy and food to call it core, right? So anyway, I mean, this has been pretty accurate. When we are going down, our headline tends to go down. When we're going up, our headline tends to go up. But I like to know there's more than just a handful of readings. I like to know that it doesn't exclude things in this inflation look. And also, shelter is a massive part of CPI, and shelter is also very lagging. So anyway, we'll see. But yesterday's test was, okay, the market sold off 1%, but it's right back where it started. So I've just got to ask this. We're at 74.90 right now. Our flashpoint trade is looking good. So hopefully we see a nice profit right away and we can walk away pretty happy with that. And I am curious, is the market using this test right there to fill that gap and work its way into new all-time highs, possibly up into a bit of a trap here where I do think there's some summer volatility, maybe a pullback coming into July, August, September window. And does that pullback get to, something like that? I mean, maybe. But, I'm thinking of waterfall income. It's like waterfall income trades. I think the highest strikes we have are like 6,800. So, I mean, even if we hit highs and we come back and threaten this pullback, it's like that pullback might get bigger. Like if we hit 7,700 or 7,750 or so, let's say we hit 7,700 and then we fall back to these lows. I mean, there's a 6% correction. If we fall back to the 200-day moving average, I mean, I'm just put it on the radar. A 10% correction could still happen. But if we hit all-time highs again, pulling back to the 200-day moving average is a 10% correction, but it still is a bull market structure. So, yeah, there could be a lot of volatility ahead. But I'm curious in the near term, is this market going to use that little, gap up pullback to stay positive and just keep grinding into positive gamma, try to eclipse these highs at 76.20, try to maybe drift up here a little bit higher, but, bait the bulls and start stalling, rolling over. And who knows why? I don't know why it's going to fall. Could be a slip in semiconductors, could be a more obvious rotation. Could be something else. Could be the 6-day window that we finally do ink a deal with Iran, because it's not done yet. But we could ink a deal in Iran, and the market's like, all right, now we're gonna sell the news. Who knows? But just saying, this 144 to 2-day moving average to me are still on the radar for potentially hits this year. So it just means I'm trading like cautiously bullish. Okay, 7494. HVL, or my positive negative gamma, is 7480. Oops. So let's see what happens. Overnight price action. Watching the structure in here for the lows and watching this for the highs. Market's opening in about 13 minutes. If the market is up above 7,500, this market may be very interested in drifting up towards 7,530. This might be interested in drifting up towards 7,550. I'm hoping that if I do an iron condor up above that and we play some defense, that the market's not going to breach and stay above 7,550. Just remember, if we're trading at 74.96 with a plus minus 69 or plus minus 66, I've got to take that into consideration for my deltas and my expected moves. So we will see. Let's go back and take a quick peek at SPX. Right now it's showing 355. Could we sneak in another 5 cents here? Maybe. Hopefully. I'm going to sneak in another 5 cents. So I'm looking at a 335 close. So it'd be really nice is if I get filled at this first available price and it's right around like 340 or 345. Usually that's not the case. Usually if I put in that take profit order, I'm going to get filled with that take profit order. So I'm going to try to penny that thing up an extra 5 cents. See if that'll fill me. Engine options might be a loser. Maybe. That is one participation trade. So we had to be close though. This trade, we had engineered options. We did a participation trade, right? And then we had so we had trade 1 here, trade 2 here yesterday that had to be close to getting filled, but it didn't. So I'm just in one engineered option trade. But this is our participation trade. I use this as my break-even level for the last week's close, and we still have our defense down here and down here. So if the market is up to 7480, we did not take. I told you all we took a terrible trade on participation. It's a terrible entry. That's why I opted for the deeper break evens. Now our expiration is Monday, so if the market is going to get above 75 today and keep rallying into Monday even, we might still walk away with a participation trade win. It's very possible. So just hang in there with me for engineered options. We'll see if the market's going to sustain this run and maybe get back to these highs. We'll see. Yeah, I'm going to let them expire. They'll be losses, Steve. There's nothing to do on those. I can't. If I want to close the trade out to save myself 5 cents, I'll go. Let me just look at all my orders here. So we have a couple pinch point trades that'll close out for losses. We've already had a few winners this week as well, but the ones that are not going to pay us, I'll just put in expiration here. So days to expiration. So PPC, that's going to be a loss, 225. BYD, 225. And IT, 225. I'm taking those losses. That's it. So there's nothing to do. If we're nowhere near, it's like, are we above $30 today? No. Are we above? We're right in the middle on BYD, which is super annoying actually. So we didn't get into the call side or the put side. We're still stuck right in the middle. IT, this one slipped way, way, way below. That was a, I mean, that's a big whiff. IT, that has to look like a terrible chart, by the way. Ha! Look at that thing. Just blasting through support. So what did we take the trade based on? We took the trade based on, consolidation. We got the breakout to the upside and it freaking failed hard. So that's a lot of volatility, right? So, it is what it is. I'll take the losses. And it's going to put a dent in our gains, but we've had, 7, 8 times more wins than we've had losses. So it's fine. Just keep trading. Pinch point is a shotgun approach. There's a lot of great setups. You filter out, find 10, 15, 20 great scans, throw in some pending orders, get them filled, have a lot of profit. You're going to take some losses along the way. That's why I set it up for defined risk. It's not a ratio LPO, the ratio spread. Yeah, what is the ratio spread? I've got the broken wing butterfly that's defined risk. Our ratio spread's like 360 something, right? Let me check. We got open in 8 minutes, by the way. So I'm just going to write that down. So PPC. So PPC, BYD, and IT. Those are going to be 3 losses for pinch point. Look at Microsoft. See what I have for Microsoft. I mean, a 360 by 345. I'm not that worried about it. I mean, my break-even price would be 330 minus the credit. So 330 minus $1.25. I own shares at 328.75 in Microsoft. 328.75. So that's really where my risk is at, even though this has been a horrific turn. This is down 19 plus percent. Okay. 328 is my break even. So Microsoft, from this little fake out trade to the upside, if we fell to 328, that's a 30% drop. Not saying that it can't happen, but do you think price is just going to fall straight, or do you think there's going to be some semblance of, this could be more consolidation over here with some type of wedge? This could come down to the neckline and bounce off the neckline and go back up again, and this could just be major support. I mean, I'll give it a chance. I'll give it a chance. And then if we look at the Snowflake side, I mean, what's Microsoft? This is one of the strongest. I know it's Mag 7. I know people are exiting Mag 7. I know people are rotating out of Mag 7. I get it. But 22 times earnings, which for a Mag 7 stock is actually quite low. And we're talking a discounted cash flow at $550. Is Microsoft spending money as aggressively as others? Are they raising debt? I mean, I just think people hate Copilot. I think that's why Microsoft is getting beat up so badly. But I think it's a trade that I can. I mean, if we maintain some semblance of a bull market, I'm pretty confident that my plan B is, if I took the assignment at a 328.75 break even, I can repair it with covered calls, and that's most likely what I'll do. Is I'll repair it with covered calls. So it wasn't a ton of premium because I went pretty far out of the money. It was $1.25. So $1.25, $1.25. We have that broken wing butterfly here for pinch that, we want to see if there's a bid here. This is out to July. My ratio spread for Project Options Edge is a 360 by 345. So we've got a $1,500 profit trap and the credit. So yeah, I mean, that break even at 328. Let's look at the delta. Let's look at the delta at a 328. So if we go out to our expiration for August, there's earnings. Here's August. Look at our 328. We're actually still outside of the expected move. So we're still looking at roughly an 85% chance of that trade winning for us, even though we've had a terrible turnaround with a 19 plus percent drawdown on Microsoft. We still have an 85% chance of profit on the trade. And even if I do get assigned, if we are still maintaining some ounce of a stable market, or a bull market for that matter, I would like to, own the shares and flip it for maybe a $500 to $1,000 and be done with it. I think that's a good use of my capital if I feel like I can repair it. Okay, so we'll see what happens. And, honestly, if the market is, and we don't know this now, but as we come into August, if the market is coming into this 360 area, that's a $15 profit trap. So if we're nearing that expiration in August, well, we might actually see some bonus profits. So for a $1.25 credit, maybe I can close it for an extra $3 to $4 before expiration and turn this into a winning trade anyway. And not have to take the assignment and actually get a profit trap into that final, week. So, I mean, it was all plan A is hopefully not take any risk. Plan B is if I have risk on the trade, I've got a $15 buffer that keeps my break even much lower to 328. Plan C is I'm willing to take the assignment. For me, I have the cash to take the assignment and I'll try to repair it. So let's say we wanted to repair it. I know we have opening bell in 4 minutes. Let's go out just like 2 weeks. If I went out 2 weeks here, let's say 13, 14 days, an at the money covered call is trading for $9 to $10. So if I'm assigned with a break even price at 328 and I do an at the money covered call for an extra $9 or $10 credit for a 2-week covered call, all I need price to do is stay there, get above my strike, pull an extra $1,000. I turn a ratio spread for $1.25 with no profit trap into an assignment flip for a $1,000 winner. That's not a bad result. And if you wanted to hang on to Microsoft longer, like a 328 ownership price, doesn't seem like a bad discount. Not saying it's the best, because what if this is a larger reversal pattern? But look, if Microsoft is breaking this way, if Microsoft is heading off a cliff, I feel like we're going to have bigger problems in the overall markets. This is really like, oh boy, IGV is just getting slaughtered. And then what else is looking good? Is the market rotating into defensives? Is it rotating into staples? Is it rotating into like the most conservative sectors? We'll see. But I think we can just give ourselves a chance to let this thing play out. We still have a pretty good percentage of probability on paper. So it's a 14 delta. We still have like an 85% chance of profit on the trade. That's doable. Okay. Let's see here. IGV sector wise. I'm trying to think what else. I want to look at CBOE because that was expiration today. We took the trade off for profit. I just was using this one as a little case study because our break even price was 258.50. So this is one that if I was going to get assigned, I'm taking the ownership price at getting assigned at 270. My break even's 258.50. If I went into CBOE, same type of thing. And again, I don't have to take the assignment because we did take profit on the trade. But if I went out to next week, so I take the assignment, I go out to next week, 8 days out to next Friday, and I sell an at the money covered call, my break even's 258. Look, I could do a 255 covered call. I could do 257. I can get $700 to $800 on that trade. If CBOE just stops going down for a week, and we can get price back above 255 or above 257.50, we can flip that ratio spread for $600 or $800. If it keeps going down, well, I just go week to week to week and I keep lowering my cost basis. But if I have a break even of 258 and I do a 257.50, it's like I lower my cost basis now to like 251. If I do it another week, I try to lower it another $6, $7 if possible. So I don't think it's an impossible stock to repair. The amount of volatility this stock has seen is pretty incredible. The IV rank, by the way, is 101. So anyway, I think it's something we could consider repairing if you still have the trade. I took the price off. 365. That's a great fill for Flashpoint. Holy shnikes. Excellent fill. 365. Dude, I'll take that all freaking day. Flashpoint update. Generous fill for profit. Entry was a 220 debit. Close at a 365 credit. That's a big win. We're above 7,500, by the way. So that is a 145 out of 220. That's a 66% winner. That's a great winner for Flashpoint. So congrats on that, everybody. That's a great win. Okay, markets clearing 75. I'm going to try to get some Expected moves. Let's go SPX. Today is don't use the AM expiration, by the way. Use the weekly. Okay. To the upside, I'm looking at 60s. That 9 delta seems out of place, doesn't it? I'm going to go 65, 85 and try to play some defense. And I was looking at 7,300, which is so far freaking out of the way. 73, 72.80. I might want to move that up a little bit. That's $1 for a 20 wide. Let's see here. Let me look at the GEX. So 74, 73. I mean, probably go a little bit higher on the put side. 20, 40. I mean, not by much. If I want a pretty conservative $100, I'm just going to move this thing way down and see if I can still get $1. Let me see if I can get $1 out of this. Let's go. All right. 15.95. Give me $1.05. Come on. All right, just got filled for $1.05. I'm playing it pretty high. I'm going to play some defense on this as well. So that is give me a $15 credit as well. That would be risking 5 to make 1,500. That puts my break even up to 75.80 today. All right, so I'm in. You can let that one marinate for a second. That's coming in for daily profit play. Today is the 18th. It's the weekly expiration. Don't choose the AM. 7565. 7585. 7320. 7300. $5 credit. Filled. I do want to play some defense on the upside. This is an 8 delta call. This is a 1 delta put. So very, very low delta on the put side. Call side, I want to play some defense up in here. So maybe doing like the 75 by 90. See what this one pays or costs. It's 15 wide. Let's see what this looks like. That puts my break even around 75 or 76.05. All right, I'm willing to throw in a 10-cent debit there. 30-cent debit to go 20 wide. Now I want a little bit more profit. Move this up. 10-cent debit, kicking that defense a little bit earlier. So that puts my break even above 76. I'll pay 10 to 15 cents for this one. 10-cent debit, see if that will fill. All right, I'm going to sacrifice 15 cents. All right, so top D is in. I'm sacrificing 15 cents, so I'm going to make $90 on daily profit play, but my defense covers up to $1,500. And I'm only doing that because there's a massive open interest level at 7,600 in case this market wants to run and be outside of that expected move. Otherwise, I'm trying to take advantage of some efficiency today. So SPX 618 expiration. Remember, it's the weekly. 7575. 7590. 7615. 15 cents debit. Break-even price on that one is 7605. Technically, it's 7604.85. Top D. All right. So keep an eye on that one. Wow, look at that. That's a sharp, sharp turn, isn't it? I mean, kudos to the market for fighting back and giving us a great fill on Flashpoint. That was actually much more generous than I thought it would be. So a 365. I mean, I almost want to check that to make sure the broker isn't jerking me around because I feel like that's a very generous fill. I mean, the market was only like 40 points above our strike. But granted, our trade was, I mean, we had price getting threatened. We were 60 points lower than our price yesterday. So we got a very good debit at 225. But anyway, I'm pretty happy with that fill. Daily profit play. This should be looking pretty good then. Let's go SPX. So my defense, I'm going the 7565. 7565, and that's 20 wide. 7320. So there's my daily profit play. There's my top defense. We got filled on a waterfall income trade yesterday, which is nice. I always love it when we have those pullbacks getting us filled on an extra trade. Nice win on Flashpoint. So daily profit play is already showing 20 bucks profit. I want this to just hopefully be a full winner today. Let's see if the market, goes mad today. It is a pretty wide open space. I mean, so positive gamma, 75.8 or 74.80. That's a key level today. If we're below it, we're in negative gamma. The scary part about negative gamma is we have a lot of space below 74.60 to fall to the zeros. So we could have a very wild post-Fed OPEX triple witching holiday week. I mean, who knows? There could be wide open space. So you can see here on my trade view read with Tanuki trade, this is a very large transition zone before it's technically bearish versus bullish. So the market might just spend some time, being very, very choppy in here. And that's okay. But if I'm positioning high enough and low enough, hopefully we are, A-okay for a daily profit play iron condor today. I'm just going to sit on the $5 Flashpoint posted. Why are you sitting on that, Rick? Why are you not taking profit? Did you not get filled? I mean, if you follow the order, you should have been filled at least at the take profit. So who's in Flashpoint? Who's out of Flashpoint? Oh, I see. Okay. Flashpoint. You're sitting on the $5. Yeah, good idea. So sitting on the $5, see if it gets filled. That makes sense. I thought you were talking about the profit on Flashpoint. I'm like, that should be done. We should be profitable there. Got it. Okay. Flashpoint got posted. All right, cool. Let's post it. Flashpoint. New order. 7326. Okay. Again, realistically, we're probably not going to get filled on that trade today. And the reason why is look at where our close was yesterday. Close is at 7420. The market had quite the rally this morning and, another 0.4, 0.5% gap up. So when we go from a 7420 close all the way up to an open, I mean, the market was up. Are you kidding me? Like the market was literally up over 1% today to start the day. I mean, we opened right here at this top. So that's pretty crazy. That really is pretty crazy. There's your close yesterday. This is your open. The market was up over 1.2%, and it has given it back pretty fast. So my point is this. I'll still take the trade. 7326 is a pain point. The reason that's calculated on the algo is because it's based on the close yesterday. So we have plenty of breathing room to see if Flashpoint's going to get filled, which I feel a lot more comfortable at that level than I would if I was just taking the trade based on the open. I feel like, well, this market could fall in here on its way to 74. I don't really want the Flashpoint to get filled in this area. Like I'm happy to see if we get filled, it's going to be down to some fresh lows. Okay. All right. So I'll put the trade in 7365 at a 245 debit. So trade. Remember, today is Thursday, but we have to go to 2 trading days. So you're going to have to use the 23rd expiration. I will make a note. Flashpoint trade update. Nice winner from the 617 entry. Today's trade with holiday on Friday, I'm using the 623 expiration. So 2 trading days is Tuesday. Okay, so I'm going to take the trade with a 623 expiration. So we have the 22nd is a 1-day trade, and the 23rd is a 2-day trade because we have a holiday weekend, right? So I'm choosing the 623 expiration. I'll make a note there for members. All right. So let's get that trade in. 7365 going out to the 23rd. 7365 for a 245 debit. Good for the day. 245 for the day. Take profit 325. I'm going to bump that up to a 40% winner. And I'll move this to the stop that I'll cancel. So pending order, good for the day. Take profit. I'm just going to cancel the working stop loss. And then the tsunami order is 7295. 7295, 7300, 270 debit. 270 debit, good for the day. 325, looking for a 30% winner. I'm just going to bump it up a little bit higher than the alert. So 350 to 355. And then the stop that I will put in as a cancel. So 270 good for the day. Okay, flashpoint orders are in. It's just 40% off your debit. So if I'm looking at, I'll just do the trade again. So if I did 7365 by 7370, I put in that debit at 245. So if I get filled for a 245 debit and it closes as a 345 credit, so I'm in for 245, closing at 345, that's $100. So $100 out of a 245 debit is a 40.8% return on risk. I did, yeah. It's in the member chat. I posted the daily profit run and the defense. I put a top defense trade in. I might as well put in now we're seeing some price action. I'm going to see what the put defense is going to offer us. So let me go to SPX. Today's daily profit play defense around 20. So I think for defense on the put side, I'd like to see a credit if possible. So that's my call side. There's my put side. Let's flip this around. 73.20. I'm going to go. Let's go 25 by. That's 20 wide. So 25.05. And that would be 20 here. See if that's a small debit. Ooh, 5-cent credit. Give me 5 cents credit. 5 cents credit. Maybe I can do this. That's a debit. That's a debit. Credit's probably going to be here. Yeah, I was going to say 10 wide. I want more than that though. I want 20 wide. That puts my break even at 72.85. Give me a 5-cent debit here. I guess I'll pay the small debit. All right. It's unlikely that we need the defense, but 20 wide and 15 wide is a pretty good defensive trap to have. So I'm putting in some bottom defense as well if anybody's interested. Bottom D, SPX. That puts my break-even price at 7385.05 with a 20 wide profit trap. So hopefully we don't need that. I mean, my expected move box gap adjusted, even with the big run up today, 7568, and I did the 7565. So we put a horizontal line up here. 7565 is my call side, and 7320. And this is a 7352 with a gap adjusted. So we're pretty far out of the way on the put side. Doesn't guarantee anything, but I mean, if it gives me a little more confidence knowing we're trading very, very low deltas today. And because yesterday was an inefficient day, even though it's an OPEX, I feel like the market, volatile or not, might still finish inside the range box today. 7565. Okay. But that's a big gap to work with. I was going to say, looking at some gamma today, I mean, 7475, 7500. Do we just have price kind of bounce around there all day? It does look like, overnight price action kind of suggesting that we may still see price holding here, holding here. I mean, I don't know if that's a great trade to just kind of ride this thing out. Example being like an iron butterfly type trade. Because if we break below 7460, I mean, there's room to fall to 7400. If we break above 75 and keep pushing higher, we can get to 7550. We could see some direction today. But I mean, after yesterday's sell-off, I mean, you can see everything's green today. I mean, you got the Nasdaq up 1.6% for crying out loud. Dow's up 1/3 of 1%. Russell's up over 1%. S&P's over 0.5%. It's like, it's a pretty good fight coming back from the FOMC yesterday. CL, yeah, I mean, I keep it open. Certainly, if I'm not filled on daily profit late, I'm not taking less credit. So I'm going to keep it open at $1.05. If it starts to go higher or lower, I mean, it might still fill up. And remember, $1.05 out of 20 wide is not a great trade. Like, that's high risk, which is why I'm playing defense. but I would not take the 60 cents or the 50 cents or the 70 cents. It's like, yeah, I want $1. Give me $1. So we'll see. But if I'm looking at some gamma levels, I mean, is it possible 75, 74.75, 7400? I mean, those look like gettable levels. I mean, here's a major put wall down here. HVL's at 7480. So that's like your positive negative gamma pivot point, right? Major resistance at 75. So, I mean, that's where I would suspect the market's going to be range bound today. But I'll give it some space. All right, so black lines represent where I'm at for my iron condor for daily profit play, 7565, 7320. I am playing defense above. I'm playing defense below. I may not need that defense. That would give me about 85 cents on the dollar or 85 cents per contract on the day. Not a huge win, but I mean, if we have defense that we need, there's up to $1,500 here and up to $2,000 here. So any defense that does kick in would be, I'd say, pretty worthwhile. Let's see what we get. If you think the market's just going to stay range bound for the rest of the day because all the volatility was overnight, right? Like big drift lower on FOMC, big comeback and fight, and the market's just going to stay range bound. I mean, 74.8, so 748 XSP. I mean, what's an iron fly at the guts? 7480. I mean, we have about 30. I mean, if we went 50 wide, I don't know if this is a great trade or not, but if we went 50 wide, I mean, you're risking 1,900 to make 3,000, and it's not really about risking the full amount. It's about just seeing if the next 60 minutes price can just hang out around this 74.85, 74.80 zone, and see this $31 a credit turn into $28 a credit, $27 a credit. Take a 10% winner. Make $300 today. It's like, that's not a bad trade to look at it. But there's risk. But price would have to go all the way above 75.10 or down below 74.50 for us to take on any risk on this trade. So if you think it's going to be sticky, this may not be a bad spot to play. But this is going to be one that if I took a trade like this, you want to manage it intraday. I agree, Rick. Yeah, don't take the defense trades if you don't have a fill. That's a good point. So hopefully everyone sees Rick's comment. If you don't have daily profit play filled, do not take the defense trades. They're defense trades on your daily profit play, right? Because they're very low percentage fills. Like, I don't want a broken wing butterfly that's going to cost me 10 cents to have it be, a 1% chance of getting a profit. I want it only because I'm defending the call side and put side of my daily profit play. So if you're filled on daily profit play, then yes, I'm going to play defense. Okay. So let's see. I mean, it is kind of tempting to take that trade if we're going to just fart around at 74.80. My concern is that this overnight move, if we break 74.60, I do feel like the market is very vulnerable to come back down and revisit yesterday's low. I mean, again, our strikes at 73.20. I mean, the market would have to dump pretty far I mean, intraday price action wise, we'd have to drop a lot. I'm not saying that it can't get there. We've certainly seen swings like this before, but to have the market basically open here and drop, I mean, we'd have to see a 2.5% move to the downside for our daily profit play to be in any trouble. So I'm taking some confidence. Like, yeah, I think we're okay on the daily profit play. But if we break 74.60 and we fall to 7,400, I mean, it'd be lovely to see a nice out of the money butterfly that maybe gets some love late in the day. And I'll keep an eye on that here for double ups. Right now, I just don't have the evidence that suggests 7,400 is a big strike. It's a big put wall, but I don't have the price action confirming that we're breaking below 74.60. If we break below that, and I start to see that this maybe increases on absolute gex, maybe gets down towards this expected move. We have a max pain point down here at 7,370. But I think the key break is going to be price has to close below 7,460, and then we can play that out of the money butterfly. If it just keeps dancing around in that range and it's just a lot of volatility, then I don't want to force that trade. It does look like a big gamma today. It's probably dirt cheap, to be honest. But if I put the trade in, I'll show you like it's probably a very low probability profit. Let's look at 7,400. If I went 20 wide, I mean it's a dollar. I mean, so if I took this trade, it's not because I'm gonna make net profit. Like if I took this trade, I'm essentially gonna wash away like 70. I mean, what 70 cents, 75 cents of my daily profit play. So I'd be flat on the day. I'd make $0 on daily profit play. And so if this doesn't win, I have nothing to show for it. At least with daily profit play, I can walk away with 80 to 90 bucks today. If I have this trade, Phil, it's like only spending 80 cents to make up to $2,000 is a fantastic trade. Even if this one offered $200, $300, $400 of profit, that's a good winner. And I could still keep the daily profit play, but there's an 11% chance of that trade being profitable. So it's not a high probability trade. But if we break 74.60 and we are looking to retest yesterday's lows, that is a good trade. The only issue is it's going to be a little bit more expensive because if we break another 10 points lower, this is going to increase probability of profit. This is going to increase the debit of the trade. And so we're probably looking at maybe $1.20 to $1.50 on this trade. It's still high reward, low risk. But let's see if we crack this low. I'll put a chart line here at 7,460. Daryl, where'd you get filled at, by the way? It looked like I got a pretty generous fill at 365 this morning. So that was a much bigger profit target than I anticipated, but I'm happy with that. That was like an extra 25 or 30 cents on top of my credit. 370. Look at you, man. Great trade. We're not going to argue about that. Nice. Rick got 375. Oh my gosh. 360, 365, 370, 375. Linda's going to tell me she got $5. Rudy says same here, 365. Good. Yep. Excellent. Yeah, it was a good win. It was just nice to see that the market. I mean, I looked at this all night. I was very curious. Like, when I saw the market was up like 0.5%, I was like, well, this can make an interesting morning for Flashpoint. And the fact that we opened up near the high made it even better. So yeah, it was a lovely fill. Good trade. And happy to have that overall winner. Let me get Flashpoint in here. 220 debit filled at 360. I think it filled me at 365. 365, yeah. So 3.65. Okay. Nice. That was a good win. That was a Flashpoint trade from yesterday. So we took in the debit at 220 and we got filled today for a 360, 365, 370, 375. Some traders had. The nice part was it was a generous fill because my take profit, you can see here in my working order or filled order, was a 335. So following the alert yesterday, it was like a 325 or 330 close. The broker filled me at 365 this morning, filled you at 375, 370 this morning. Those are generous fills where it's like positive, right? They filled you higher than your actual take profit, which is a nice, bonus for us. Yep. Good. Cool. So yeah, good win. Happy with that. All right. What else we got going on here today? So, I mean, yeah, if the market's going to chop around, I do think there's enough implied volatility that an iron butterfly could work out pretty well at that 7480. But I want to manage the intraday. If we break below 60 and looks like we're falling lower, I'd probably bail on that trade. I mean, daily prop play, it's like I'm not super stoked about just having a winner on daily prop play. I'd like to make a few more bucks today if I can. I I do wonder if I were to, stay inside the box, or if, let's say that I look at like, another call spread and another put spread here, if I can get a little bit better premium. This is a 7353 low and a 7568. So let me see what the iron condor looks like if I use the 7350, maybe 10 wide. That's a little bit, I mean, it's only 20 cents on the 10 wide, which is pretty terrible. But that's also a 4 delta right now. And then my 7568. So if I went 70 by 80, like, I mean, 10 wide for 40 cents, that's a shit trade. I'm not taking that trade. Like, if that fills for $1 or $2, I don't mind taking that trade. So I'll look at, I mean, those levels are using the expected move box, right? So 50. We'll see. I'll keep an eye. I'm going to put this one in for like a 250. So if we see some pressure, either upside pressure returns, I'm slightly higher. Downside pressure, and if I went 20 wide, I mean, even that, like, it's a lot of risk. I've got a broken wing that's 15 wide. Let's see, maybe puts my break even at 7575. What's that break even? 1,500 bucks. Let's flip that around, make it more favorable. Yeah, I'll try this. I mean, max risk 1,000, make 1,500. Strike price would be 7,585 break even, 7,535 break even. I mean, the odds of filling are pretty low. This is a 98% chance of profit. We're probably not going to get filled on this trade. But rather than taking a high risk to low reward, let's set it with something that we're like, all right, I'll risk less. I can make more profit on this trade if this one gets filled. But chance of that filling is pretty slim. Just so you know, this is a 60-cent credit right now, and I'm asking for $15. So we need to see a lot more direction out of the market. I'm gonna go out on a limb and say this. After yesterday's sell-off for 90 points, we're probably having the high IV offer a smaller actual IV. So implied volatility is greater than realized, and therefore our trade stays inside the box, which gets us paid on daily profit play. Okay, SPCX returning to Earth. Okay, and we have weekly expirations. Makes things interesting. Yep, down to 179. I'm curious if there's a behavior here. I mean, we're right at the 50% pullback if this is what the market's going to use. So there might be a chance to catch like a short-term bid in here, right? Like the 50618 zone, the market may jump off of that. If we have weekly expirations, that's pretty cool. A little bit more nimble than the monthlies that we saw. So it might be worth taking a look at. If we hit like let's say we hit 170, that's a 618 pullback. So if we hit 170, maybe looking at like a weekly debit spread and see if this market catches a bid and pops it back up. So I'll set a chart alarm around that 170 handle. I think the dumbest thing for SpaceX is the fact that there's like 10 leverage ETFs that got launched at the same time. So I think that's the market's way of saying, yeah, you're welcome, leverage traders. This market is now down 20%. You're down 40% in the leverage ETF. But we'll see. And that's just taking a defined risk stab if I like it. Otherwise, I've got 2 trades in on SpaceX for Project Opportunities. I have one for January of 2027 and one for December of 2028. Collectively, I think I pulled in $36 on one and $3.90 in the other. So I've got about $4,000 in SpaceX across the board. So about 39.9 times. SpaceX will make me some good profits. It'll make me close to like $80,000. That's not a bad way to get some payday on SpaceX. I'm not 10x my money, but also my break even prices would be like $80 or $63, and I don't think I'm really gonna have to sit on assignment there. So all right, chart alarms are set. We'll keep an eye on that one. It's not a yeah, it's a January. I'll look at the trade here. I just took it yesterday afternoon, so I don't think I posted it yet. SpaceX, let me check. Yep, here it is. I'll throw it in right now. I took this trade like at 2 p.m. yesterday, so that's why I didn't get a chance to get it in. I was live all day yesterday, like 1 p.m. FOMC, ran that all the way 3 o'clock, was with Kane until like 4:30. But here's the trade. Again, optional. If you already have your SpaceX exposure, you don't have to take this one, but I'm doing both. So this is going to be trade number 156. For Project Options Edge. I got filled for 385. Now that it's pulling back, you might actually get a better fill. It was a January 15th, and I did the 105 by 95. Yeah, it's actually offering up 385, 390 credit. So yeah, I like it. Pretty much, I got filled at 385 to 390 yesterday. So it's offering up the same trade, which is good. The plan on this trade is I'm willing to own the shares if it's below $95. That would be 95 minus 10 minus 390. I'd own the shares at $81.10. I would repair that trade with covered calls. We'd be getting very close to a 50% pullback on SpaceX if that's the case. I just got 10. You're telling me you got 10 shares at 180? Ten shares? Commodities week on higher rate assumptions. Let's have a look at that. So market right now still, range bound. We're hanging out right around that positive negative gamma pivot at 74.80. I'm gonna tease myself here with the SPX butterfly. SPX for today. It's not been super long, but if we got into that like 7480, that's a HVL. I was going 50 wide. So it'd be 75.30, 74.30. Still, it's not even up 50 cents. So it needs time. Like if there's another hour, another 2 hours in this trade, and it's still sticky around 74.80, this trade's probably worth a few $100. But if we have any direction, it's like I would not want to sit and hold this trade if we're going to break and go somewhere today. Okay. You took that SpaceX 211 days out. Yeah, because that's the end of the year. I also took a SpaceX trade 900 days out. But look, building those trades. So you remember talking about this trade? This was the hey, let's see if we get to 7,400. Let me see what this one looked like yesterday at 3 p.m. So Wednesday at 3 p.m. Wednesday at what was our low yesterday? Around 3:30. There would have been some profit there. The only issue is I don't think it was enough profit to cover both sides of the trade. So I'm glad we didn't force that trade. We were looking at the 7,400 butterfly to the 7,600, like the all-time high butterfly. We did hit 7,400, but because the expiration would have been on the I guess it would have been yesterday. So that would have been, was that enough? Nope, because we closed at 20. Well, I guess it was a good trade. What did I do? This is the this is the trade I put yesterday. We tried to get filled on like, I remember now. So this trade we looked at, this is two broke wing butterflies. I looked at the trade for $7.50. Did anybody pay attention to this trade yesterday? I did see when the markets were down at 2 p.m. and then returning down again like 3:30, 3:45, and we're selling off. So at 2 p.m., this trade was offering about $1.50 credit. So this one wasn't offering anything because it's nowhere near the call side, but $1.50 credit. The only issue with that trade is $1.50 credit on that put fly would have been so it would have been 10 wide and then 20 wide. So I'd have 20 minus 10 minus $1.50. That trade would still be risking $850. So I'm risking $850 to make $1.50, but I do have a 10 wide profit trap. It would have been an interesting way to see how that like trade played out for the day. I mean, obviously taking $1.50 is better than zero because we didn't get filled at a high credit like we wanted. But anyway, I didn't take the trade. It was I saw that it was trading like $1.10, $1.40, $1.50. It might have been close to $2. That would have been about as good as you could do yesterday, and there would have been zero fill on the call side. Yeah, that was the broken wing butterfly, the Batman trade, the cat trade, whatever you're gonna call it. But it was only offering about $1.50 at its best, and that was right after the 2 p.m. drop. And then once we proceeded lower late in the day, it was it was too late in the day to see that credit on a broken wing offer up the credit that I wanted. So it is what it is. Like, were we wrong? Not really. I mean, we had the levels nailed pretty well. It didn't breach the downside. It didn't breach the upside. So we called the levels pretty well. It was just wanting to get that higher fill. All right, what I was going to show you is with the SpaceX trade. Okay, this is my SpaceX trade that goes all the way out to 2028. I do not intend to hold this trade to 2028. Okay, because if we do see the spot price, let's say that SpaceX goes up to 225, falls back to $150 at the IPO price, farts around there for a little bit, and then we find a bid, we find a rally, it goes back up to 200 plus. For some reason, let's just say we go up to like $400, $500 by the end of the year. If I go to December, here's January 1st. So we get through the end of the year. If the spot price of SpaceX is $400 to $500, I'm not going to sit on that trade for another 713 days to make an extra $800. I will take the $2,800 of profit and say good enough. But I will also let this be time as my friend. Let's say we go out to the first quarter of 2027. I mean, if we're up to fresh highs at $300, okay, if we're up to $400, I mean, I'm just evaluating like time and price. Where's my profit? I don't think I'm going to hold this trade for a full 900 days. If price goes up, my profit will increase, and I can take a lot of the profit off the table well before expiration. But if I hold this trade expiration, yes, it's a long time. It's 911 days. But if I hold it, that's full profit. And if I get assigned, my break-even price is $63, which is beyond a 50% discount of the IPO price. And if we hit a high of 225, that's an even deeper discount. We'd probably be looking at like a 60 to 65% discount. So we'll see. Jerry says, could we use an iron condor for defense, or would that be too expensive? Well, explain what you're trying to do for the iron condor for defense. I mean, one thing I do consider for what you talk when we're talking SPX here, Jerry. So one thing I do consider with defense is this trade was filled for $1.05, right? If I take the exact same trade, the exact same legs, but I put it in for $15, that's still defense. Because then my total my total credit is 1605 and my total risk is $30. So I'm risking what, 1395 to make up to 1605. I actually put this in a favorable 1-to-1. Now I need price to still cooperate. I need price to get into my, stay inside my expected move box. But I'll just take a much, much higher credit and maybe play some defense. Because again, at the end of the day, when most of these trades are taken, most of these trades are going to see that day in, day out, we're going to stay inside the expected move. Is it a guarantee? Of course not. The market has, like yesterday, outside moved. The day before, it was outside the box by 2 points. But most of the time, that is why the plus minus that the brokers provide is going to see price stay inside that move, because it's their job, it's dealer's job, it's liquidity provider's job to keep price stable. In the index, price stability is way more probable than not. I mean, it's literally the foundation of my entire strategy. So if I didn't believe we'd be efficient, I wouldn't freaking trade the strategy. So when you're saying create a wider defense trap, right? I mean, you can go wider on the defense, but again, it's if you're playing defense, there's two ways that I'm playing defense. One is, I'm willing to pay that small debit, like my broken wing butterfly. I'm paying 5 cents up here and 5 cents on here, or 10 cents or whatever it was. Okay, so that debit is because I pulled in $1.05 credit, and so yes, it's going to be a 10-cent debit. So my $1.05 is now minus 10 cents, and my 5 cents down here is minus another 5. So I pull my credit down to about 90 cents net on the day per contract. Now, is that great? No. But if price is up here and it offers up, $1,000 to $1,500 to also play defense, that 5 or 10 cents does not cost me a lot of money to play defense at a, 3 delta, 4 delta, 2 delta, like crazy high probability areas that the market shouldn't breach those areas. If you have a 1 delta, 1 delta, I'm just talking about the option chain. If you have a 1 delta on the top and bottom here, there's a 99% chance that those are out of the money at the end of the day. If these trades are wrong, then the market is done like a 3 standard deviation move. And that literally happens like 1% of the time. So can it happen? Yes. Can it breach your 1 deltas and 2 deltas and 5 deltas? Yes. But it's very, very rare. So I would say that our defense trades, if we're in trouble on iron condor and defense, we're talking about a move that's probably a 2 standard deviation to even a 3 standard deviation trade. And for that to happen in one day is very uncommon. But it does happen, can happen, and probably will happen. So we can't just assume that we're always going to be right. But we do win a lot of our trades, which is why I do play defense and I do manage risk. And, I accept that not every day is perfect, but we do win a lot of our trades. And for the year, by the way, I don't think we didn't get a single fill yesterday on daily profit play. So what am I at for the year to date? I think we're winning like 93% of our trades so far this year. So 645 all the way. I'm looking year to date. 645 to 539. So 645, 539. So it looks like I have 106 trades. 106 trades. 6, 7, 8, Okay. 91.5% of our trades are winners. It's not bad year to date. And yes, our losers are slightly bigger than our winners. Like sometimes more. Like I'm risking $1,000 to make $100, but I also play defense and mitigate some of the risk. We've had bonus profits that have our defense has helped us in those bonus profit situations where we've had much bigger winners. So my goal is just keep the losses as small as possible, play defense, as win as much as I possibly can. JD insights and Dalian short. I don't know, dude. You want to trade the Dalian short? I mean, you want to know when the dollar yen gets to be a really good trade? Not with a guess. Okay, we're at 161. Here's the one thing. Okay, BOJ intervention. If you think you can time it and you can take a fill here and not see this, I mean, you know how much liquidity is probably sitting at 162, by the way? Here's what wouldn't surprise me on dollar yen. I know this is totally off topic, but dollar yen, if we're up here, how many stop losses are sitting above 162? A lot. Why? Because they intervened here. They intervened here. They intervened here. Are they going to do it again? Look, we might go to 164, 165. We might have a flash crash up before we have a correction. Look, the trade to me is not guess where the top is. It is let price, and I know it's not going to be a good entry, but if price can break this structure, not just test it, not just test the trend line, I'm talking break the low, and then we look at bear flags, bear flags, bear flags. The unwind of this thing could be so fast, just like it was here. That was a 2,000 pip unwind in about 2.5 weeks of trading. Calling the top here is a wildly low probability. Banking on BOJ intervention is a terrible trade. But if we're going to go from 160 to 140, you're going to see it out here. And you can do sell stops and you can see the price just fall 3,000 pips or 2,000 pips. And you can get a stab, get the thing to break even or better, and just let it run. But to guess when they're going to step in, this is not all-time highs. The yen could go to 165, 168, 170. This might mean nothing to the yen. And their intervention, it may not be enough to even move the market more so than what they've done here for a few hundred pips, not thousands of pips. This is a risk-off trade, by the way. If the markets drop, if the dollar yen drops 2,000 pips, we are going to see the S&P probably down 5 or 10%. So are we talking about another, carry trade unraveling scare in 2026 like we had in 2024? Maybe. But the BOJ loves this Nikkei at all-time highs. It's one of the few indexes that is just crushing it right now. Here's the Nikkei. Look at this thing. I mean, this thing's up year to date like 40%. It's it is one of the largest and best performing indexes. It's not just South Korea with Samsung and, 2 semiconductor stocks. Like Nikkei is a big bad Asia index. And coming back from a 30-year drawdown, it's finally, showing some teeth. So I don't know if the BOJ wants to step in and fight. I mean, if they intervene and they crush the dollar yen down 2,000 pips, I don't think the Nikkei is going to keep making all-time highs. So I don't know. I think it's a silly trade. If it's going to set up and give us confirmation, then I want to see what the structure looks like. I mean, it looks like a great trade technically. If we have price reject here and get on the right side of the trend line, I'd love to look at a swing trade. But if I took a swing trade right here, that stop loss, I still don't trust it because the market comes right back up, tests the high, tests a slightly higher high, then over on the right side of the trend line rolls over. Then we have a pattern here. Then you take that trade. Like, I think the crazy part about the Japanese yen is you have to be extremely disciplined to trade it and use stop losses and use, risk management because it is a trade that will have no rhyme or reason and be fundamentally, driven and technically obey nothing other than it's going to go in a straight line because it should go from 160 to 140. But the issue is if this was any other currency pair, it'd probably give you a head and shoulders pattern. It'd break the neckline. It'd have some waves in here. You can sell on pullbacks and stuff. But if the yen does it, it's going to look something like this. The yen's going to go breach, flag, and it's there. It's going to take a week or two. And you're like, how did I miss that trade? That's what's very, very difficult about trading the yen. So anyway, just saying, not an easy trade. And I've said this a lot. Anybody that brings up the yen, it's like I probably made more money on the yen by not trading it because it drives me absolutely crazy. This currency pair will move so fast, so quickly, in no time at all, and then take 9 months to move again. And so since we had this retest of the lows, I mean, you're talking April 2025 for the last year and 2 months. This thing has just been slowly grinding with positive carry again. So the carry trade is alive and well all over again, but it's starting to narrow that gap. So BOJ is looking to raise up to 1%, maybe slightly higher. If the Fed raises up 25 basis points, you still have a differential. I mean, the Fed's going to be at 3.75 to 4%, while the BOJ is at 1. You're still getting positive swap by 3%. It's not risk free, but it's not negligible. So it's, I don't know. I just don't get unravels that aggressively yet. So just be careful. That's all. All right. Well, this trade looks like it is still just a big fat chop day. Positive, negative gamma, lots of volatility overnight. Let me see what the XSP offers. So there we go. There's a, I mean, not a big winner, maybe $100 right now on that 50 wide fly. So is he ever trading out 29, 29.80, 29.50? There's probably $100 in that trade. I want to see what the XSP for today. 7480 is the HVL. If I went, I mean, even 10 wide. I mean, is the market going to stay within a 35-point range for the rest of the day? I mean, the plus minus is 302. You're getting 345. If this was, and this is the thing, like if we break above 750, I think we go to like 753 or 755. If we break below 7460, I think we drop to 7400. So if I took a trade like this 10 wide, I would almost need like 8. I kind of need, in fact, I'll do the trade. Give me $8 on a 10 wide, I'll take the trade. Because if we hit 7400 and we bounce up, I can still make money on the trade. So I'll put this trade in. I don't think it's going to get filled, but we'll see. So double ups, you got another low risk, high reward setup, but the probability of getting filled is probably not super high. So this is XSP for today. 748 is that positive negative gamma pivot. Going 10 wide. All right, pending order. Not filled. So in order for this thing to get filled, we need to see price heading back down here, get us filled, and then bounce. Okay, rally up here, get us filled, and then reject. Because what I'm doing is getting ourselves 8 points. So if we go 748, as long as price is less than 756, we make money. As long as price is greater than 740, we make money. But if price stays here all day, it's never going to give us enough credit to take the trade. And that's okay. But let's see what happens. Okay. Anything I need to be aware of? It's like, do we breach 7,400? Do we get all the way down? It's like, I mean, is this a gap or is this intraday? This was intraday, right? That was that Thursday tweet. Yeah, that was that war's over tweet intraday when the market rips up 1.5% in 30 minutes. So we'll see what happens. But I am guessing that after yesterday's inefficient close, that today prices are going to stay somewhat range bound. And I'm going to look for, maybe a pin price later in the day. Can we pin around 7480? Can we pin around 7500? Why would I look at those two strikes in particular? Because if we're choppy, pinning at the HVL today or pinning at the biggest gamma that it's close to I could see that being a logical, logical level. So again, if it stays very, very tight, then those are two spots that look pretty decent. Okay. How many of you were on closing playbook with Kane and I yesterday? Type in closing playbook if you were in with us yesterday. We went a little bit longer than usual. I shared my SpaceX trade. We talked about some broadening pattern stuff in the indexes, what to expect with Warsh now. But then we got in the topic of trading psychology. Kane had an email he was kind of using as an example of just a trader said like I basically overthought it, overanalyzed it, got scared out of the trade. And so we talked for like probably 30 to 45 minutes on trading psychology. Reason I'm asking is because I think it's a great segment that I'd like to, you know, I'm gonna trim it up a little bit and then throw it into my YouTube channel and just have it out there as like another foundational course where it's like it's just good. It's good education. The hard part is I wish there was a fast track to better trading psychology, but there's not. I mean, in my experience, I've talked to thousands and thousands of traders over the last 12, 13 years of doing financial education. Ultimately, traders find their own path. I mean, yes, I can be your guide, I can be your trader, I can get in the trenches with you, I can trade right alongside you. But the emotional side, all I can show you is that this is what I do. I trade small. My wins and losses are my wins and losses. It's my risk capital. I choose how big or small I decide to go. And I try to make wins and losses feel as boring as possible. It's just a trade. I want to win. I expect to win, but I'm never swinging. I'm never swinging for the fences. A lot of my trades and wins are base hits because I want to stay in the game and just survive and take lots of trades. So it's not super sexy that way. I get it. Like, I mean, if you want to swing for the fences, like I'm not your guy. I'm not going to make those 5x returns. And I mean, my closest thing to home run trades are what we do in double ups when we hit 300 to 5% winners. That's a home run trade, right? And we can do that pretty frequently, throughout a week of trading. Um, but I'm talking like, look, you don't see me chasing SpaceX IPO. You don't see me throwing calls out at random stuff in the market. I'm not that trader. I'm way more methodical and I'm, way more probability based. And I like to just take a bunch of trades that win. So point is, when Kane and I talked yesterday, two very different perspectives, but like trying to get to the same point, which is there's planning and preparation. There's executing the trade with plan A, plan B, plan C. But the quicker you can get comfortable with your own like trader self, and it's a very different, like you are a different person as a trader than you are as your normal, human life. Trading will expose all of your like fears and all your greed and all your weaknesses and all everything. Like everything is out in the open for just a black and white result. And so the one thing you can control when you trade is your trade size. And so I do trade very, very small. I mean, even if I get myself in trouble, a lot of my trades are always less than 1% risk. And it's not that I don't want to make more money. It's not that I don't want to make bigger returns. It's that I know on the flip side of that trade is risk. And risk can compound very quickly. I mean, this year, so for example, we are sitting here just off of these all-time highs, right? And when this market came up, we were within about 1%. We were within 1% of all-time highs. I was another 4.5% above my year-to-date highs. And the same thing happening here. It's like, let's say the market is going to pull back a little bit. Well, I do have enough exposure and a bunch of base hits out there that I have volatility exposure. But if I look at my charts and I see that, I'm 40% away from current price. I'm trading at this, this is a 10 delta strike. This is a 5 delta strike. I mean, I have very high probability of profits on these trades. But because the IV may be expanding, the broker has to reprice these things. It's like, well, if the volatility stays this high, then yeah, I've got some risk in the trade. But when volatility comes in waves and it hits a peak and then it reverts, We may still have a outlierish volatility event in 2026. I don't know. You'd think we'd have enough crazy stuff happening that we'd see something wild happen in the VIX, or maybe it's just vol suppression. Maybe we have like, oh, it's 15, it goes up to 20. 15 goes up to 20. Spikes up to 25 because we have a decent pullback, goes back down to 15. I don't know. But a 60 VIX is a what's going on? A black swan? I don't know. Point is, I'll see how long the segment was, but I'm going to trim it up, throw a thumbnail on it, put it on my YouTube channel, and include it in my kind of foundational stuff here. So, one trade mastery, free session, option whiteboard, free session, anatomy of trade, free session. I'll do, trading psychology segment. So when I'll trim it to where we start talking about it. And I just think it's a couple interesting perspectives on, two real traders that do this full time. And the only way that I've been able to manage my emotions in trading is by trading smaller and making sure that my risk is what I think is somewhat controlled. And I try to, plan out things where I'm less surprised. Nothing's perfect. Having a backup plan is helpful, but I think that if you learn how to take losses as a trader, you're going to be a better trader. And if you talked to me a decade ago, that was not my style. I spent almost 3 years in currencies managing a currency fund, never taking losses. And I say that because I wouldn't take a loss. I refused to close out for losing trades. I would just sit in drawdowns and work myself through them. And I would sit on 10, 15, 20% drawdowns to make like 2% on the upside. But I do it, and I sacrifice a lot of time and energy and pain and stress, but I wouldn't lose. And eventually, it just exhausted me where I'm just like, look, man, I'm up every single day, almost 20 hours a day trading, grinding through a drawdown when I could be trading. This is a clean setup. This is a better setup. This is a better setup. And I'm passing on opportunities that were like really good setups because I'm in a bad trade. So I learned from that stuff. And when I migrated a lot of my funds over to trading options, it became way more about managing risk and way more about defined risk trading. And now, again, I can take losses pretty graciously. I don't like to lose, but I can still take them on the chin and not really sweat it. So one thing you can control is your trade size, and when your losses and wins, emotionally feel about the same, I think you're getting somewhere as a trader. But if you're trading to get excited, if you're trading to have energy and you're trading to have, passion, it's like, I think you're in the wrong business. I think you can be passionate about the challenge, you can be passionate about the game, but I don't think you should be passionate about the money that comes with it. Because I see way too many traders that put the profits ahead of the strategy and the plan and just stick to the mechanics. Strategies make money. Give strategies a fair shake, they'll make money, most likely. You're trading something that has an upward bias. You have a house edge. Stick with the house edge, So anyway, it's a good segment. So I'll get it trimmed up and I'll throw it in. I'll put it in here as a full link. I'll get it in my YouTube channel. So I'll get a nice little thumbnail. See if I can. I'll try to get a thumbnail for Kane and I. But yeah, give me like I'll get that done maybe later today if I can get it downloaded, put it in. I just have to trim the video up and throw it in there. So, all right, what else? Aggie says, please make it more easy to join the discussion. How so? So the Zoom chat for everyone doesn't make it easy? I can't believe that China, Russia haven't called Trump and told him to lay off Iran. Yeah. Yeah, I don't know, man. It's so noisy. Here we are for the day, just chopping around. Triple witching. That's one thing when we come into these like weekly, these monthly expirations, and it's triple witching, is quadruple witching, right? A lot of volatility happens around it, but not necessarily the day of. Like, I don't even know what the nominal expiration value is today, but it's probably one of the largest on record. You throw SpaceX in the mix for IPO last week. You throw in FOMC. It's probably a $5-6 trillion expiration today. Does it look like price is crazy volatile this morning? Double up trade yesterday got filled for $10. That it should have been a what was the strikes on that, Smith? What were the strikes? Was that the 753 filled for $10? It's been active on the minute basis for us scalpers, I guess. Dude, if you can scalp within a 20 to 30 point move on S&P, then kudos to you. That's grinding. Okay, so if we did it was the XSP yesterday. So the 753 by 763 and the 753 by 743. No, that's not right. Should have been 741 and 765, right? So we did $10 credit and a 12 wide. So that puts your break even at 743, and XSP closed at 742.1, right? So technically that trade would have lost about $90. So if you held it, you would have lost $90 instead of the full $200. So partial loss if you did nothing. J44 on YouTube. If you want that video, I've got a video on that. A lot of the ways that I repair a trade is really just covered calls and options. So there's a YouTube video on it if you want to check it out. So you can search for Options 101. Options 101. And one of these thumbnails is covered calls and turning losers into winners. There's your video. So I'd watch that video. It's 17 minutes. I talk about, a really simple way to set up like, hey, I want to own the stock. What's a good way to do it? Credit spread. Price falls against it. I take the long put, I close out for profit, I lower my cost basis, take the credit, I get assigned the stock, and then I flip it with a covered call. Flip it meaning I repair it. So I'll give you an example. Let's say, you're dead set on SpaceX. Okay. So let's say right now, here's an example. I could totally do this trade. Do I love this trade? No, because I don't really want to own SpaceX at $150. But if I did the trade, here's an example. Let's say that I take the 170 by 165 SpaceX credit spread, and I go out for like 60 days. Well, if this is down below 150, or this low at 135, and we IPO opened at 150, if I do like a 170 by 165, and let's say the broker will give me, $2 credit, or I could even set it at 250 and say, yeah, come to me, give me filled at 250 and whatever, give me the credit. All right. So let's do some math on this. If I go out, let's do like a 60 to 90 day trade. So SpaceX here. Let's go out. So 90 days puts us into September. I want to be managing the put actively. If I'm like, well, I'll ride this put down to like $100. I'll just throw out a couple numbers that I'm interested in trading. So let's go at 90 days. If I go 175 by 1, that's crazy, right? I can get $6.15. That's not right. There's no way. That's totally mispriced. Because that's only 5 wide, so that's impossible. If I go 10 wide, is that right? I could get $8.60 to risk $10. I'm only risking $1.40 on that trade. No. I've got another trade in. Sorry. So 170 by 160. All right, I get $5. That's fair. I don't know what the other trade was, but I had it in there. Okay, so I can get $5.10. Now that's a 1-to-1 trade. I'm risking $4.90 to make $5.10. But what I can do is, let's say that my plan B. So this is plan A. Plan A is I pull in $510 of credit. If price stays above 170, I get paid $510 of credit, or I manage that partial profit along the way. The backup plan is plan B is I want to ride this thing all the way down to $100. And what would I do with that if price gets to $100? I would take my 160 long put, I'd close it when price is at $100, which gives me from the 160 down to the 100. That would give me hopefully the real value of around 60 bucks. So real value would be around 60 bucks. Now, if there's time left in the trade, it may not be worth 60 bucks, but that should help me lower my cost basis. So if I took the assignment at 170, I get assigned 170 minus my 510, and let's say minus my, $60. So that would be 165. I mean, I could own the shares at around 105 and I just wait for the assignment and I can start repairing the trade. So when I go to repair it, that's what I'm typically doing. It's going to be something that I want to own, and I'm going to keep adding covered calls to lower my cost basis or get it called away for a break even or better. And so sometimes we can turn losers into winners this way. Sometimes when you take the shares and you basically flip the stock, I don't like to own a bunch of stuff. I like to have dry powder, and I like those outlier events when we get them that we can go on a shopping spree. That's usually when I get the biggest injections of profit. I mean, April 2024, June, I guess July, August 2024, March, April 2025, December 2025, February, March, April of this year. I missed my shopping spree because we didn't hit that 10% pullback. We didn't hit the market breadth I was after to go long on my synthetics, but it was enough to sell a lot of premium and still get like a nice injection once we had a VIX revert and we had some time. But this is one way I could play it where it's like, yeah, I can take this trade, but I'd be actively managing the put side to see like, well, if we did drop to $100, would I be interested in, taking profit on the 160 long put, lower my cost basis? I'd own the shares around a 105 break even. So I go in and I sell covered calls, and hopefully if I can sell a 105 covered call for $6 or $8, I lower my cost basis down to 99. And it gets called away at 105 and I make 600 bucks. So I'm investing $10,000 to maybe make $600 or $900. Okay. So it's better than losing, right? It's better than losing $500 on the other side of that credit spread. So anyway, there's a 17-minute video on it. Check it out. Will it automatically assign? No. I mean, if the stock is dropping, you may get assigned. Okay. But if the stock is dropping, I mean, usually on a credit spread, there's still less than about a 7% chance of getting assigned on a risk-defined trade. Would you be assigned? Probably. If the market's down to 100 bucks, it's probably looking for, whoever's got a buying order out there, they're probably going to get assigned. But remember, if you get assigned at 170, your 160 is still live, and that is in profit. Because at the end of the day, this is still a risk-defined 10-wide spread. So, and this goes back to I've taught this so many times in classes about credit spreads. People lose their freaking marbles when it's like, I just got assigned SpaceX. What do I do? Well, close out your long put, close out the shares, and it's going to be about the same $5 risk that you had in the original trade. That's your management. If you're just going to take the loss, take the loss. It should be the exact same. So an assignment does not put you in like, oh, you're in trouble. The broker's going to call you and take money from you. You still have the long put, which is your hedge. So you can still get out of the trade for the exact same risk you took. Maybe even smaller if you're lucky, depending on the timing of that trade. But you can still get the same defined risk trade. So anybody that gets assigned, first rule is don't panic. You have a hedge. You have the other side of that trade working in your favor. So, like I said, if I thought, you know what, I'm going to take a trade like this because if SpaceX goes up, give me some profit. If SpaceX goes down, I'll use the 160 to manage my put side, lower the cost basis, and maybe try to take ownership around, look, I'll take the assignment at 170, but if I have my $5 credit and $60 of long put credit here, then I own the shares around 105. Maybe I can just hang on to it for a while. And then I've got a nice little 30% discount off the IPO price, sit on it for maybe another 2 to 4 weeks. And yeah, it's okay. But my plan A would be price goes up and I get paid $500. My plan B is if price is falling, I've got to be prepared for a potential assignment. And what would I do with that assignment? If I want to keep it, I'm going to keep the shares and try to repair it. I don't want to take a loss. If I own shares in something that has the chance or potential to go higher, then I'm going to keep the shares and try to keep selling calls to lower my cost basis. If I own it at 105 and I sell it down to lower it to 99, and I sell it again over the next 2 weeks and lower it to 93, I sell it again the next couple weeks and lower it to 91. I mean, I don't have to let this thing rage to the upside. I just want to get it called away at break even or better to not lose $500. That's risk management too. Not losing is pretty good. But if you can obviously flip it for like a $5 or $10 winner, that's nice to repair the stock and make a couple $1,000. So anyway, Pete, yeah, that's what I was thinking. 8.3 trillion today. I have a feeling because of SpaceX, it hit a huge jump. We had a lot of like 5 and 6 trillions lately, but yeah, these OPEXs they're just getting bigger and bigger and bigger, and they will. Like options they're just huge now. Meanwhile, price today is just 10, 15 points. Nasdaq, we come back up the daily VWAP. So Nasdaq that's a nice bounce off a daily VWAP back to weekly. We bounce off equal lows. I mean, it's really choppy. We're below weekly VWAP in S&P. We're back above on Nasdaq. Are semiconductors catching a bid today? Yep, looks like it. Are we back to all-time highs? Good Lord, dude. This is wild to me. I mean, I can't even get a definer's trade that I'm happy with because it's like, nope, all-time highs. There's your 30% retracement. Hit us all. I mean, I don't know. I hope we have a broadening pattern. I really do. Like this would be nice to see. Okay. I mean, I'm guessing here, but like, I don't even know how to draw this, dude. I mean, this is such a big rally. Maybe this is a 3 drive pattern. We go up to a top around that like 18127, and then we have an ABC correction, possibly coming back to where we started. I could still see a decent correction coming in semiconductors, which obviously will weigh on the Nasdaq a little bit. But this could be a 3 drive pattern. So 1, 2, 3, 4, 5, and then you look for an ABC correction. Depends on how nasty it gets, but it would probably break the structure and maybe retest this area. Doesn't mean I want to go short. Just means I'm going to be patient and freaking wait. hopefully that would pay off. But it's I mean, look, it's impressive. It is impressive that it's going up. SOXX all-time highs today. Nasdaq probably doing better than the S&P today. Up 2% on Nasdaq today. Look at that turnaround overnight. Close here, open here. Very little price action today, but a massive turnaround overnight. Gabriel for Discord. I've got a link. This link will be good for about 30 minutes or so. Let's go invite link for the next 30 minutes. Okay, that's my Discord. I do have a couple of like security things in Discord. You have to like answer 1 question or 2 questions. I'm just making sure we don't have bots and scammers. So it should be pretty easy to join. It's basically like, why are you here? What else? Do I see room for SMH, SOX? I mean, it already is. It's hitting new highs. Do I see them to run higher? Yeah, I do. I mean, look at that 3 drive pattern I'm talking about. If this is 1, 2, 3, 4, 5, I mean, to me, this is maybe like the 695 to 700 zone. Let's say like 690 to 720. But if it starts to flinch up here, I think we have an ABC correction. And, I mean, again, it still sets up like very similar structure wise. And if we get a decent correction, I'll be interested in maybe scooping up some definers trades. But I am not chasing these all-time highs. If I was already in it, I wouldn't care. But I'm not in it, and I'm just going to wait. I mean, let me see what the IV is. I mean, would I be interested in a SMH? I mean, this is 95 IV rank. I could probably go use this March low at 350. I mean, I've got to take a pretty sizable like risk on like, well, if semiconductors stay positive for the rest of the year and this AI narrative is super positive, I can probably go out to the end of the year at a 350 strike. I mean, that's not a bad trade. Like I can build this trade. It's like, am I that confident that we maintain this like AI push? Sure. It's a 5 delta at a freaking 95 IV rank. It's like, I'd hope that it's not going to hit. So let me see something kind of crazy here. Let me go like 400 by 350. I mean, to me, with a $5,000 profit trap and a $266 winner, I'd be okay taking that trade. I'd own shares at $300. So SMH could fall from now all the way down to 300. We'd fall 54%. I mean, that is, I'd say, a pretty low probability. But doesn't mean it can't happen. So my question is, if we take a all in AI trade and all of a sudden it goes all for nothing, I mean, I do expect this like parabolic move to have some crazy volatility. Um, I don't have to go nearly that wide on the ratio spread. I could tighten this up and I could go, okay, I'll go 40 wide, make $400. I go 30 wide, I make $500. Like, it gets better and better. But to me, it's like, yeah, give me a 50 wide. Look at how low the delta is on this trade. If I just did like a 10 wide, if I just did a naked put, look, I love the idea of making $700 in the trade, but my delta's 10. If I take this 50 wide ratio spread, so buy the 400, sell the 350. I mean, my delta is a 1.97. So let me see if I can get this thing for like 250 or better. And why am I choosing 350? Because that is that's a 360 low. So $300, that's a pretty sizable correction. And it's December. So yeah, we'll see. Discord, yeah, I'll share the Discord. All right, it's in Zoom, it's in YouTube. Rotation, downer neutral tape and banks, retail pharma, healthcare, chips and mags. Yeah, I mean, mags definitely seeing the rotation. Chips, I mean, rotation out of chips. I mean, mags is really the underperformer. Hyperscalers are getting their butts kicked right now. Semiconductors are maintaining a bid. I think that's just like the growth side. Like, the momentum trade is semiconductors. Growth is not Mag 7 anymore. That's just like the source. Like, the source of funding is Mag 7. But the growth is, I mean, the trip trade is like crazy growth. So all right, I'm gonna take this trade. I'm gonna see if I can get this thing filled like maybe 250 or better. I might tweak this. Like, okay, I go 45 wide, try to get $3 in this trade. Let's try like a 315. Let's try like 350 actually. I don't think I'm gonna get a good fill above the mid price, but let's find out. So there. All right, whatever I get filled at for a couple of my accounts, and I'll throw it in for Project Options Edge. This is showing. I'll try 315. I'm going to get it just a slightly. That was freaking easy. 315 credit. Now I'm going to try it again. I'm going to try to bump this up another 10 cents. 325 credit. So not taking 325. Will it take 320? Yes. So 315 filled, 320 filled. I'm going to try to get filled at 320 on these accounts. 320 is getting filled. Okay. Try the 315 again. 315 got filled. Okay. So Project Options Edge, get a little trade in SMH if you're interested. New trade. It's number 157. So 1218 expiration. Buying the 395. Selling the free 350. So 315 to 320 credit. Stats on this one. Right now with an IV at 94.7. IV rank 94.7. Quite high. That's on both sides, by the way. There's a 97% probability of profit. And I'm willing to, own SMH and repair. The price is less than 350 by expiration. Break-even price will be, so I got filled at 315, so 350 minus 45 minus 315. I'd own it at 301.85. All right. So that trade is in. Does this show GEX changing as the day progressive? Well, in the web app, yes. If you're in Tanuki Trade with the web app, it's live. So we're at 7490. This is all live. So we're sitting here like pretty sticky gamma at 7,500. Right now that's like the most notable is we're just going to hang out around 7,500 today. It seems gettable, yeah. That seems like the most notable level. And that's very little real price action for the day because we opened up around 75.10 or 75.15. What was our open today? We opened at 75.08 and we're talking about a pin price maybe at 7,500. So I'm just looking at somewhere between, 74, let's say 7,500 and 74.80. I could see price pinning somewhere in there today. But the day isn't done, So I would say right now, like daily prof play looks relatively safe as far as our strikes, high and low. If the OPEX and expiration want to give us some wild shenanigans late in the day, like maybe there's a bum rush to the upside or fall. It just seems like right now it's like all the hype got priced in for Wednesday FOMC to overnight's, last night's move overnight. And now it's just like, just super chill. Buying power. Yeah. I'm using margin accounts. So that buying power is like, $1,200. $1,300. If I did it on a standard margin, it's $7,800. If I do it on an IRA account, it's a lot more. It's 70 grand in an IRA account. So it's not going, it's going to be my portfolio margin trades. Okay. Anything else for the day? As to wrap up, I don't think we have anything on the docket for presentations. We've been doing Flashpoint all week. For those of you that came into Flashpoint, got a trade with me yesterday. We had a nice winner this morning. That's awesome. We are winning over 70% of our trades. to put the levels in every single day. It's very, very low maintenance. It's just a pending order, and the details are all given to your alerts every single morning, which is nice. Tomorrow there's no market, so markets are closed. I mean, there'll be some crypto and some forex and stuff, but it's going to be light trading. There's no stocks, no bonds. U.S. holiday for Juneteenth, so no live session tomorrow, and that'll be good. Just to take a little 3-day weekend, see what we can do to kind of win the day. Hopefully, the rest of the day. I mean, I'm considering maybe around this like 90 zone, like split the difference. Let me see what this looks like for. Let me see what the defined risk looks like for SPX. And I could tighten it up with XSP as well. But if I'm looking at like a 7490, let's try this 7490. If I go 30 wide, I'm risking 1,000 to make 2,000. If we're at 75 or at 75.80, I can still make $1,000 on the trade. If I tighten this up a little bit more, risking 700 to make 1,800, that's just under 3 to 1. So I get about a 2 to 1 here, and we're covering most of the expected move. If I wanted to trim this risk up a little bit, I can go XSP, or I can just look at a pin price. Hey, if we stay around 7,500, let me go, 7,520 here. What's this going to cost me? It's going to be a $500 max risk to make $1,500. So that's 3 to 1. If I do the same thing at a 74.80, which is probably going to be a little bit cheaper, I could probably get 3 or 4 to 1. If I want to stick to that for the day, it's like I got to throw some risk at it. But if we have, this holds true, pin around 75, maybe pin around the HVL at 74.80, could play that a little bit. If I want to keep the risk a little bit tighter today, XSP, 750 pin, maybe 30 wide. That's just under 2 to 1. I can try to get this one to fill for $2 or more. Or just do a call spread, I guess. If I just did a call butterfly, 750, 3 wide, 3 wide. I like this one less. So debit of $1 to make, and it's about the same profile. Yeah, it's not bad. So about 2 to 1. So if this is $1 debit, if it's $1 debit, I'm risking 1 to make 2. That's a 2 to 1. If I get a pin at 748, maybe a little bit more profit. So maybe it's like a 75-cent debit. Let's see what that looks like. 748, 3 wide, 75 to 80 cents debit. So slightly favorable reward to risk, like just over 2 to 1, 2.5 to 1. So price is going to be calm the rest of the day. Like there's a pretty inexpensive way to do it for, a couple $100. You can get payouts of up to, $200 on each one. So a loser is going to cost you about $80 to $100, but a winner is going to pay out up to like $200. Okay, Pete, good point. Trump has been tweeting about 30 minutes ago, usual noise. His cap's not mine. You're welcome. There you go. I mean, I'll believe it when I see it, man. But if Trump can rip the market up today, like this is why I'm a little hesitant to say that I'm just going to hold and say like we're going to pin right here. Look, man, it's post FOMC. It's before the holiday. Markets might be thinner volume. I don't know, but I would say if Trump does try to do something to rip the market one way or the other, most likely he's trying to rip it to the upside. He is consistently the first line of defense in the market. The market listens a lot, but sometimes it's annoying when it happens intraday that he's trying to just like manipulate, influence, prop this stuff up every single day. So I'll just hang out, not force any trades. I'll just sit on the daily profit lace right now. Let's see how good this looks later in the day. I mean, the 7,500 is looking pretty decent for a gamma strike and a pin. But it's like, are we going to move 5 points for the rest of the day? That's hard to believe. Okay. Tweeted about an Apple Intel contract. Yeah, because he's probably like, why am I down on my Intel stock? Which is not, it's at all-time highs. Apple. I mean, Tim Cook and company kiss the ring. So where's Apple at? Not at all-time highs. But for Mag 7 though, I mean, Mag's down, Apple just off all-time highs, Amazon pretty far off all-time highs, Broadcom way off all-time highs, Google just off all-time highs, Meta looks pretty rough right now, under the 200-day moving average, Microsoft huge decline back into the 200-day moving average. Not a Mag 7, but still down here in Netflix. I wonder if Netflix is just getting beat up because they're not buying stuff. They're not doing like the Warner Brothers merger, and they're not buying Lionsgate Studios or whatever the hell else they're talking about. I still like Netflix. I've got ratio spreads on there for project optimization. Nvidia, I mean, it's still pretty contained. It's the number one stock in the world. It's $5 trillion. Tesla, choppy, but hanging in there. I mean, it's not like SpaceX came in and took a lot of steam out of Tesla. It's a good premium stock. I'm still holding a bunch of exposure down here towards like the 250s and 260s and 220s. So if we just maintain some stability, it's either going to be a range trade where this is, the high in Tesla, this is a topping pattern and we start heading lower, or this is just building, this structure breaks, it's up here, pull back, we're going to hit highs and still go higher, which I don't know. If we go to all-time highs, it's not a car company. This is energy, robotics, chips, gigawatts, whatever. But if it's just a car company, nobody cares about Tesla as a car company. Yeah, Armando, check this out. I think I posted it earlier. This one, covered calls turn winners into losers. Share. There it is. Okay. All right. So we'll hang out. That was yesterday's trade. I mean, if I wanted to build something in XSP like this 748, 758, 748, or sorry, 738, that is pending. Let me go double ups. So 748, yeah, I mean, I built that trade out 10 wide for an $8 credit. 7.5. I mean, I could go higher. I can go like 12 wide and try to get $9 or $10 credit if we get like a scream at the end of the day. But that is also well outside the expected move box. So my hope is that we just maintain the efficiency that we didn't have yesterday, and the market can bounce back. And this is what we've seen the market be really good at: is anytime the market is outside the expected move, it will tend to tighten up. But this is what's tricky about the dealers: is the dealers love to have a day like this, and they put this high IV, and then the actual is this, right? So this is why I like to sell premium on those, after the inefficient days, because I think our probability to profit is slightly in our favor. So let's see. Trump not due to speak today, left France. VP Vance holding White House briefing. Yeah, fine. I mean, if every day we had to trade around Trump, we'd never trade. I mean, markets aren't stupid. They know he's going to talk and tweet and Truth Social. It's like, we got to get this stuff priced in. So let me see. I've got the 748 pending already. I might modify this one. I might cancel this one and try 749, split the difference between my 80 and 7,500, and then go, I'm going to go like 12 wide here. So 749 to 761 to 737. Give me, $9 or $10 out of 12 wide. Similar to yesterday, but hopefully covering enough space. So risking 200 to make 1,000, but we're going to have a much bigger move late in the day. So I'll keep an eye on it. But that to me is like a super low risk trade, and it should contain most of our expected moves we're looking at. Okay. And then SPX daily profit play is probably looking decent, but still a lot of time left. It's up. I mean, it's up 85 cents. So, I mean, we're almost at the max profit already in daily profit play. How many of you got filled, by the way? I know the trade seemed to be pretty quick. I was 20 wide. I got $1.05. I mean, a lot of you said like, oh, it's already down to 80 cents, 90 cents. It may have been a tough one to get filled on. Um, I'll still keep it there. Like, I'm still going to keep the trade open. I'm probably going to let it go to expiration. There's an application form for Discord. Is that just secure? Yes, it's exactly right. Look, man. I hate Discord because every time I just ran like hey, here's where I keep all my stuff on Discord. It's like scammer. Chris, you sent me a message. No, I didn't. So I'm like, at the very least, I'm going to put like one layer of like answer a couple questions for me, show that you're a real person, and you can get my Discord. So it's not that far. The voice sounds like it's doing better. I mean, the voice is okay. My throat still is killing me. JD says, "Nuh-uh, nuh-uh." Did not get filled. Did not get filled. All right, that's fair. Again, I didn't mean it to be too fast. It's just like I'm throwing out the levels. We talked about our highs and lows. I went 20 wide. I was, watching it at that like $10, $15. I got filled for $1.05, $1.05. But I get it. If there's any direction, like the market, breaks below the lows and sells off, or the market, goes above the highs, like it's still possible on a 20 wide to get filled at $1 plus. But I wouldn't take less. So the day is not done. If this is a big fat, hey, everyone's ready to, calm things down because they just neutralized yesterday's FOMC sell off, and it's going to be this is our OPEX for today. I mean, I wouldn't be terribly surprised because it's like tomorrow's a holiday. Market's just going to button things up, and it's like peace. Enjoy the 4-day week or the 3-day weekend. So, but just in case, I'm just respecting, some of the potential levels. So we'll see. Late in the day, it's like if this continues to grow, it's like 7,500 continues to show like it looks like a pretty good strike. If the market's interested, it could be a pretty good strike. But I'm going to throw two levels out there. 7,500, 7,480. I could see that being a, couple of levels that'd be key strikes today. Uh, 7,400, 7,380 put spread for $1.60. It's 20 wide. It's pretty good there though, Pete. And quite a bit out of the money. So yeah, good trade, man. Cool. All right. It's already 11:20. I'm gonna let you go. Okay, good stuff, everybody. Let's come back and do it again next week. No live session tomorrow. It's Juneteenth. Happy Friday. Enjoy the long weekends. Hopefully we see some profits today. And yeah, see you on Monday. All right, good stuff. Thanks, everybody. Bye.